Welcome to a capital hungry breakdown and analysis webinar on Euro USD. So, as it's the start of a new fiscal year, and of course, new yearly candle, quarterly candle, and of course, month, we are going to be starting off with some higher time frame analysis, looking at some of the macro fundamentals, what is current, and aligning that with what is currently going on, current market structure and price action to develop some trade ideas. And it's always good to do some higher time frame analysis to see any potential for historical repetition, technically and fundamentally, to see some of the higher time frame order flow and price positioning, trend and market structure, and see if you can use this for confirms as you move down the time frames and line up potential trade ideas. Okay, so let's start off here on the yearly chart. Of course, for those of you who know, with coronavirus, as it first hit the markets and caused that initial mass fear, we had the US dollar gain some short-term strength, which caused this initial spike down to start off 2020 and retest this previous price sensitivity low, because the US dollar is a safe haven currency and the euro is a risk currency. So you have your risk currencies drop, your safe haven currencies go up in value as you had this pandemic hit the markets and world, which nobody has ever seen before. What we want to identify is that downside move retested this previous candle body conjunction point in price sensitivity area and failed to break, and the actual candle body itself at the end of the year closed back above this previous price sensitivity area. Okay, the fundamental reason for this is after we had the initial negativity and downside impact priced in by investors and digested, then we had the Federal Reserve go into a massive printing state of the US dollar, which led to an oversupply and decrease in demand as those US dollars were used to, of course, inject and support the US economy and the US stock market. So that is why when you look at the dollar chart and the Dow Jones chart next to each other side by side, you'll see that the same time that Dow Jones had his downside move and started recovering was the same time the US dollar faded out its fear strength and started declining, because that massive printing of the US dollars fundamentally went into the US stock market to support that rally by the Federal Reserve. But of course, this massive printing leads to an oversupply, which leads to a decrease in demand and a decrease in the value of the US dollar. So as we had that decrease in the value of the US dollar throughout the rest of the year, we started to get economies recovering. We started to get global equities having a V-shaped recovery across the board. When we look at, of course, our market sentiment, this led to a impulsive bullish structure and bullish trend on Euro USD, right? So fundamentally, just to quickly recap so we understand, 2020 started out with the euro respecting its bearish downside move, failing to break this previous price sensitivity area as the fear got priced in, and central banks, specifically the Federal Reserve, started increasing their printing of the US dollar to stimulate their economy. This led to a decrease in the value of the US dollar and an increase in the value of risk currencies as you entered a recovery stage, and global equities were also recovering, respecting bullish structure. And this led to a very strong bullish engulfing yearly close above this previous price sensitivity area to the left, as well as respecting this higher time frame bullish structure and failing to break below previous price sensitivity areas. Okay, now we can see as this bullish market structure from these lows is being respected, and we have this squeeze between these cells, we're starting to get more bullish price action and momentum with this bullish engulfing candle that broke above this price sensitivity area, is potentially breaking above higher time frame bear structure, and already grabbed liquidity and failed to break previous lows or failed to break the bullish higher time frame structure as well. Okay, just with this new year, if we have continued market optimism, which decreases the value of safe haven currencies, especially having any optimism regarding Brexit, which can allow the euro and the which can allow the euro region and UK to start to enter more of an economic recovery stage and have a more prosperous economy. There's a lot of potential that we could have this yearly candle just go turn bearish to grab liquidity and retest intraday bullish structure points, and then continue up bullish to retest previous higher time frame price sensitivity areas. This route is the optimistic route. If we have continued rally with euro equities, if we have continued weakness and bearish structure in the US dollar, if we have continued respect to the bullish structure on Euro USD intraday and market optimism regarding COVID and market optimism regarding Brexit, we have a lot of validation to continue this move in bullish rally to the upside. When we come to the 3-month time frame, you can really see that we were respecting this bearish market structure where we had this previous sell-off, right? So, okay, let's better dissect this. 2015 area, you have Brexit come into the scene, right? You have a break of this strong support area and new lows created at around 1.05 flat, okay? From this point, you get a pullback that does a 50% correction of this impulsive move, but fails to break higher and fails to break this bearish market structure because Brexit is still lingering and there's still a lot of overall negative factors on Euro's economy, such as Brexit for one, and another one was the Euro-US trade war that was starting to emerge, and then of course COVID, okay? Similar to GJ, even with COVID, like late 2020, even with Brexit, even with the US Euro trade war, even with COVID, it was not enough order flow to break below these previous historical lows. And then as the US dollar weakened and we had that recovery stage, we have had this upside move to break bearish market structure and now retest previous highs. Okay. What would be ideal for us to look for buys and play this continued bullish momentum and optimistic trend would be having this new yearly candle, quarterly candle, and monthly candle do a pullback and correct some of this impulsive upside move, find a support on the intraday, and then continue back up bullish. And of course, safer buys is post pullback above previous highs to the left here from 2018. So these are some factors that we can create just by looking at and understanding the fundamentals and technicals in the higher time frames and zooming down the time frames. I wouldn't be looking for any higher time frame sells unless we broke below 1.10. If I was a positional trader, if I was a contract trader trying to look for sells on euro to hold for the next potential year or 2 years, I would not be looking for that unless we broke below this price point or had a continued upside rally and failed to break below higher price points. Okay. So now on the 1 month, this is looking even better for a continued rally and now for potential retest point of these previous highs. So you can see that we broke this bearish market structure. We also had a retest of this bearish market structure and a minor pullback on the intradays here that failed to break below it and had a new high created, retesting this price sensitivity area and high here. We're having some stronger bullish market structure on the intraday and all this liquidity from the downside and failures to break this historical price point and very, very slow bearish sellers price action and a lot stronger bullish impulsive candles. It would be ideal to get a pullback to 1.20 and then higher risk, higher reward buys there, or the buys above 1.2400 when we're just looking at the monthly and creating potential trade ideas from that point. We have to understand that even though we're having some coronavirus headlines, even though Brexit isn't finalized just yet, even though we're not finalized with all the vaccines, Euro equities and global equities are still bullish on the intraday timeframes. Dollar is still quite bearish, and Euro USD is still quite bullish. It would just be ideal, as we're very early into the new year and we're very early into the new month itself, that we could get a pullback first, lower wick created, and then jump in from better buy points. Okay, this is going to be easier seen on the daily and the 4 hour here. So on the 4 hour, we already have all of our key levels mapped out that we've been using for an extended period of time. And we can also generate some areas of interest in bullish market structure here as well. You can see from this historical low point, we had this intraday order block created. And from this low point, we had an extended move to the upside, right? You can see we have moves to the upsides. Instead of getting pullbacks, you have these consolidation phases. Okay. From this point here, we had another extended move to the upside now here, where we're currently sitting at 1.233 key level. Now, when we're zooming in here, EU is far too bullish to start jumping into sells willy-nilly. Okay. We can see this is some lower time frame market structure just from the last it's intraday, but it's lower time frame to intraday just because I lined it up from the 1 minute, which I'll show you guys when we do our market update webinars or during the London session. But if we could break this lower time frame and minor intraday structure and come below key level 1.219, 1.22 area flat, I see higher potential to potentially play that seller's intraday play to retest previous highs, which I was talking about on the monthly, higher time frame bullish structure, 1.199 key level, and previous highs, of course, for better risk versus reward buys here. Okay. Buy options I see are post pullback above previous highs, 1.233, to run the next higher time frame range up and create a new high by buyers, or higher risk versus reward buys at 1.99. Potential sells if we have these confirms of exhaustion by buyers at these highs, the potential to create that monthly lower wick and break this minor bullish structure below key level. I see a deeper potential for those sells there. So let me label this out. And of course, if we have US dollar strength, mass market fear, a break of this bullish higher time frame structure, and a shift in the market sentiment, then we could see a safer sells only below 1.8400. Okay, so um, Euro USD higher time frame and intraday analysis. It started the new year where we're getting some pullbacks and exhaustion at different highs and lows. For example, the US dollar, we're looking at the dollar index is getting bought up from its lows to start up the new year. But fundamentally, the US dollar is still very bullish. And when you're looking at the technical structure, of it as well, Brexit resolution is still active, which is giving some optimism to euro and GBP, holding buyers in control. Intraday highs have been created by euro buyers. The quarterly, yearly, and 1 month charts is still showing strong potential bullish upside if market optimism holds. Euro equities, German DAX still holding bullish structure. Euro overall, euro like EU overall in bullish structure. Safer buys would be either after a pullback or consolidation phase and a breakout above previous highs and key level. Higher risk, higher reward buys would be at a pullback to this key level 1.1999, a retest of bullish structure, failed to break. I would only be looking for pullback sells if we have these confirms here. Higher time frame safe sells with the confirms that were stated here.